Every dividend investor eventually faces the same question. Do you want maximum income today, steady growth for tomorrow, or a mix of both? Let me show you 3 ETF portfolios that make this choice a lot easier. We'll look at the specific ETFs behind 3 setups: a high-yield play, a growth-focused strategy, and a balanced mix of the two. And we'll quickly look at the key pros and cons of each portfolio. This is not financial advice, just my own opinions and experiences. Let's jump straight into the high-yield portfolio. Here's the idea I have in mind. The JPMorgan Global Equity Premium Income Active ETF is our core investment. It's a globally diversified covered call ETF that pays monthly. Since we're building a high-yield portfolio, the dividend yield is what matters most, and this one delivers a solid payout. With covered call ETFs, we usually cannot expect real dividend growth, so I assume 0% growth here. The second one, the iShares World Equity High Income Active ETF, is another globally diversified covered call product with a massive yield. It pays quarterly, and compared to the JPMorgan ETF, it should offer a bit more upside potential. Next, we have the SPDR S&P Global Dividend Aristocrats ETF. I think this ETF is perfect for a defensive high-yield portfolio because it provides extremely stable distributions. Many investors might prefer the iShares Stocks Global Select Dividend 100 ETF at this point, but personally, I find the SPDR version more solid. Then we add the VanEck Morningstar Developed Markets Dividend Leaders ETF, one of the most popular dividend ETFs out there. And finally, the Franklin European Quality Dividend ETF. The portfolio composition is not set in stone. You can always adjust the weights or replace ETFs entirely. This is simply how I would build it if my goal was maximum cash flow and strong diversification. Keep in mind that the dividend yields and growth numbers shown here are long-term averages since launch. Current yields may look slightly different. In this overview, you can see the annual payouts of the portfolio. Cash flow arrives every single month, which is really nice. Now, let's quickly review the portfolio. Here are the pros: excellent dividend yield, monthly cash flow, very strong global diversification. And there are 3 cons I should mention. We should expect very weak price performance. Dividend growth will also be minimal. Covered call ETFs make up 50% of the portfolio. Of course, for some investors, cash flow is priority number 1, so these downsides may not matter. However, if a 50% covered call allocation feels too high, you could adjust the portfolio like this. Instead of the iShares Covered Call ETF and the Franklin ETF, we add the WisdomTree Europe Equity Income ETF. I like this ETF a lot because it offers an excellent yield and even delivers respectable dividend growth. I could easily live with this version as well. The pros and cons stay roughly the same as with the first portfolio, but now we trade a bit of yield for a bit more dividend growth. And yes, the cash flow is still monthly. If you enjoy my content, a like and subscribe means a lot. Thanks. Let's move on to the dividend growth portfolio. With this approach, we accept a smaller starting yield and let the dividends grow over many years. Here's the idea I have for this portfolio. L&G Global Quality Dividends ETF. This new ETF looks very promising, so I would give it a large share of the portfolio. It pays monthly and is expected to deliver a solid dividend growth over time. We don't have a dividend history yet, so we don't know the actual growth rate, but the selection criteria for the companies point in the right direction. I assume growth somewhere between 5 and 7%, so let's work with 6% for now. The next ETF is the SPDR S&P US Dividend Aristocrats ETF. With a dividend growth rate of around 7%, it is currently one of the most reliable dividend growth ETFs on the market. It has delivered stable, mostly rising payouts for many years, which I really like. So this ETF also gets a 30% allocation. Next, we have the Fidelity Global Quality Income ETF. Just like the L&G ETF, it focuses on high-quality companies. Dividend growth has struggled a bit in recent years, but I'm confident it will recover over time. And finally, the WisdomTree Europe Equity Income ETF. You could also classify this one as a high-yield ETF because its average yield since launch is around 5%. I still include it here because it also offers solid dividend growth of almost 6% and has attractive payout months. Here you can see how the dividend payments of this portfolio are spread across the year. Now, a quick review of the portfolio. Pros: decent dividend growth, monthly payouts, good diversification, high-quality companies. There are two downsides to this portfolio that I want to mention. A low dividend yield of around 3.3%. Keep in mind that this is the historical average the portfolio has delivered. The actual current yields of many ETFs have dropped sharply. So if you build this portfolio today, your real yield would be under 3%. But if you think long-term, I still believe the average is the more meaningful number to work with. Let me know in the comments if you disagree. The second downside is the dividend growth itself. While 6% is not bad, I would prefer to see 8 or even 10%. But in the last few years, almost all dividend growth ETFs have struggled to raise or even keep the payouts. I really hope the situation will normalize again soon. All right, let's move on to the final portfolio, which tries to combine the strengths of high yield and dividend growth in one place. The L&G Global Quality Dividends ETF. I think this ETF also fits very well into this portfolio. It offers an attractive dividend yield and promises some dividend growth over time. Next is the Fidelity Global Quality Income ETF. I'm still convinced of this quality dividend ETF, even though both yield and growth are currently very weak. But I have to admit, if dividends keep performing as poorly as in the last 2 years, I would start questioning this ETF. The next ETF is the Vanguard FTSE All-World High Dividend Yield ETF. Why this one? Well, if you want a balanced and stress-free dividend ETF portfolio, it fits perfectly. And finally, we have the iShares World Equity High Income Active ETF. A small, high-yield boost. I personally already hold these 3 ETFs in my own portfolio, and I will probably add the L&G soon as well. In this table, you can see how the cash flow is distributed across the year. And now, the review. Pros: extremely strong global diversification. A worry-free portfolio prepared for the future. Monthly payouts. Decent dividend yield. Decent dividend growth. Cons. So, what are the downsides of a portfolio like this? Since this is a compromise between yield and growth, you could say only a decent dividend yield and only a decent dividend growth. All right, those were the 3 portfolios I wanted to show you today. Which one of these resonates with you the most? Is there anything you would change or do differently? Let me know your thoughts in the comments below. Don't forget to like and subscribe. Thanks for watching, and I'll see you next time.